Today, we are reviewing Akali, an MT5 Expert Advisor developed by Yahia Mohamed Hassan Mohamed. At first glance, the forward test looks very impressive. The account has been running for 36 weeks, and the growth is around 147%. That is a very strong start. But as always, we should not judge an EA only by the headline numbers. Let's look deeper. Here is the public forward test. The account started with about $101, and the profit is already around $150. The win rate is also very high, at about 91.5%. The profit factor is 2.41, which also looks strong. So, on the surface, Akali looks like a very profitable EA. But there are two important points we need to check. How does it make money, and how much does it lose when it is wrong? The average holding time is only 6 minutes. This is very short. So Akali appears to be a short-term scalping EA. That is not automatically bad, but with scalping EAs, broker conditions matter a lot. Spread, slippage, execution speed, and even small differences in price feed can change the result. Especially on XAUUSD, this is a very important point. The win rate is high, around 91.5% in the forward test. This looks very attractive. Many traders see a high win rate and think the EA is safe, but that is not always true. A high win rate can sometimes hide a weak risk-reward structure. So the next point is more important. How big is the average loss? In the forward test, the average profit is about $1.98, but the average loss is about minus $8.88. That means one losing trade is much larger than one winning trade. This is the classic structure of many high win rate systems. Small wins, bigger losses. The EA can look stable for a while, but when a loss happens, it can erase several previous wins. This is the real risk. One loss can be equal to around 4 or 5 average wins. So, even if the win rate is high, the EA still needs to keep winning consistently. If the market condition changes and the win rate drops, the equity curve can be damaged quickly. That is why we should never judge an EA by win rate alone. To verify the EA, I also ran my own backtest. The test period was from 2005 to 2026. The symbol was XAUUSD. The lot size was fixed at 0.01 lot. The spread was fixed at 60 points. All other settings were left at default. Here is the backtest balance curve. The final result was positive. The EA survived more than 20 years of historical data, and the account ended in profit. That is a good point. But the curve is not a smooth upward line. There is a very long period where the account did not grow much. This is the key point from the backtest. From around 2012 to around 2023, the growth was slow. The EA did not keep growing steadily for the entire 20-year period. It started to perform better again in recent market conditions. So Akali may be working well in the current market, but we cannot say yet that it has strong long-term durability in every market environment. Looking at the detailed backtest statistics, the total net profit was $1,410. The profit factor was 1.23. The total number of trades was 4,877. The win rate was also high, at around 87%. So again, the EA is profitable in the test, but the profit factor is not extremely high. And the same risk-reward issue appears in the backtest. The average profit was about $1.81. The average loss was about minus $9.93. So the structure is consistent. High win rate, small average wins, large average losses. The maximum equity drawdown in the backtest was $244.63 at 0.01 lot. In this review, I do not focus too much on drawdown percentage because percentage can change depending on account balance and lot size. Instead, I look at the absolute drawdown at a fixed 0.01 lot. This is more useful for understanding the real risk. If you increase the lot size, the drawdown can also increase roughly in proportion. So lot size management is very important with this EA. Now let's look at the trade history chart. White arrows are buy entries. Red arrows are sell entries. From the chart, Akali does not look like a typical grid or martingale EA. It does not seem to keep adding many positions in the same direction while waiting for recovery. That is a positive point. However, the entries are very short-term. Many trades appear around quick price movements. The EA seems to enter during short-term breakout or momentum phases. This matches the very short average holding time, so I would describe Akali as a breakout-style scalping EA. This kind of logic can work well when the market is moving cleanly, but it can struggle when breakouts fail. If the EA enters a breakout and the price quickly reverses, the stop loss can be much larger than the average profit. That is why the risk-reward balance matters so much here. Looking at the longer trade history chart, we can see repeated short-term entries. This supports the idea that Akali is not a long-holding trend-following EA. It is more likely designed to capture short-term movement and exit quickly. That also means the trading environment is critical. A small difference in spread or execution can change the final result. This brings us to the biggest concern: reproducibility. Because Akali appears to be a short-term XAUUSD scalper, the result may vary by broker. Spread matters, slippage matters, execution speed matters. So even if the public forward test looks good, another broker or account type may not get the same result. This is not a criticism of Akali only. This is a common issue with many scalping EAs. Now let's summarize. Akali has several good points. The current forward test is strong. The win rate is high. The profit factor in the forward test is also good. The backtest ended in profit over more than 20 years. And from the trade history, it does not look like a clear grid or martingale system. But there are also important risks. The average loss is much larger than the average profit. The backtest had a long stagnation period. The EA is short-term and may be broker-dependent. And the long-term forward durability is still not fully proven. So my conclusion is this: Akali is an interesting MT5 EA with strong early forward results. But I would not judge it only by the high win rate or recent growth. The key things to watch are the size of losses, broker reproducibility, and whether it can continue performing over a longer forward period. For now, Akali looks promising, but it still needs more time and more forward data before we can call it truly reliable. That's my review of Akali. If you found this useful, please check the full article linked in the description. And remember, with any EA, always look beyond the win rate. Check the risk structure first.